Hey everybody, what's going on? This is Danelle here at Networkchain. Hope this finds you doing well. Today we are going to talk about some of the major news stories that have come out of the cryptocurrency world this past week. As usual, let's go ahead and start with the cryptocurrency market update. As you can see, Bitcoin is currently nearly trading at $59,000, currently trading at 58.9, up about 0.13% over the last 7 days. So basically, it stayed flat basically over the last 7 days. Obviously, it had a little bit of up and down over the past week, but it's pretty much at the levels that it was at this time last week. Ethereum currently trading at $2,600. It has recovered quite nicely from the crash that we had a little over a week ago when it was near around $2,000. Now it's back up to $2,600. It's up 2.66% over the last 7 days. You have BNB up over 5%, trading at $533. Solana is up 1.2%, trading in that $140 range. XRP just above that 50-cent range, now closing in on 60 cents. We'll see if he'll get there. It's currently trading at about 57 cents, up 2.69% over the last week. Toncoin in the top 10 still, currently trading above 11%, almost 12% over the last 7 days. Dogecoin is pretty much flat, still at that 10-cent range, and our Cardano is still hanging in there at 2% up over the past week, currently trading at 33 cents. So if we look at some of the major financial advisory firms in the United States, they have been handling billions and nearly trillions of dollars worth of assets under management. If we look at the top firms, BlackRock, which as we know currently holds the most Bitcoin out of all of the issuers, the IBIT ETF, IBIT, currently holds the most Bitcoin currently from the Bitcoin ETFs. They are a firm that is headquartered in New York City, and they have over $10 trillion in assets under management. You have number 2, which is Vanguard Group. Number 3, Fidelity Investments. State Street is number 4. They're well known for their SPY ETF, which is very well known, as it is an index that basically follows the S&P 500. So a lot of people trade in and out of the SPY. Then you have Morgan Stanley at number 5. So most of these companies, if you look at the top 5 investment firms and advisory firms in the United States that handle trillions of dollars in assets under management, they are all getting involved in blockchain technology and Bitcoin, whether it be from investing or being an issuer like BlackRock with the Bitcoin ETF. So the only one that hasn't really done anything in terms of getting involved in the blockchain space as of yet, or at least not that we know of currently, is Vanguard Group. So when you look at the top 5 managers, 4 of them are in some way tangentially, if not directly, related to Bitcoin or the Bitcoin ETFs. So it's just a matter of fact when you look at institutions and looking at Wall Street getting involved in Bitcoin and the digital asset space. For us, it's just another indicator showing us how popular this asset class is becoming. And we still see the demand is going to continue to come into this space. And so we just want to look at the tea leaves and see, okay, Wall Street banks, Wall Street investment firms are all getting involved in Bitcoin and the Bitcoin ETFs. They're vying for trying to hold as much Bitcoin as possible. If we look here, Morgan Stanley, which was on that list, they recently, as we mentioned in our last video, they are now allowing their advisors to promote the Bitcoin ETFs. So they will be allowing their wealthier clients to have access to the Bitcoin ETFs. So it is another showing of how much Wall Street is definitely interested in getting into the Bitcoin ETFs and into the digital asset class. We now have the Ethereum ETFs, which are now publicly trading on the markets. So now we have millions and potentially billions of dollars that could be coming, of more inflows that could be coming into the digital asset space. It's just another indication of the demand and the herd that it's on its way into the digital asset space. So if you look here, we see that the TradFi firms recently had to disclose their positions. If you're managing over, I believe it's $100 million. You have to make a SEC disclosure as to the investments that you've made every quarter. So yes, as you can see here, the filings are required by the SEC with firms that manage over $100 million in assets. And every quarter, they have to release this 13F filing. And we get a chance to see what these Wall Street banks and firms and other investment firms around the country, what they're investing in. So we see that Morgan Stanley, as we mentioned, not only are they going to be promoting the ETFs to their wealthier clients, they also, in and of themselves, have also invested in Bitcoin and the Bitcoin ETFs. So you can see here, they have invested over $400 million in the various ETFs. So they didn't just buy the BlackRock offering, they also went into Fidelity as well as Grayscale and some of the other ETFs that are being offered on the market. So it just goes to show not only Wall Street, but you can see here Wisconsin's pension fund, which we mentioned in our IG as well as X posts. They have also disclosed that they're holding IBIT as well as Grayscale's fund over the past quarter. And so we're just seeing that there are a lot of institutions, as you see here, they are coming, still coming. Total filings are up. You have over 1,900 holders that are holding the ETFs across all of the 10 ETFs that are currently trading on the public market. That's up from 1,479 in Q1. So that's a 30% increase in the past quarter, from quarter one to quarter two. Obviously, we're currently in quarter three, so we'll see when those filings come out later on in the year if that is going to continue to go up in terms of how many Wall Street firms are interested in Bitcoin and cryptocurrencies. State Street, which was also on that list of the 5 largest investment firms in the United States, they have reached a partnership with Galaxy Digital to develop active crypto trading products. So they are looking to invest in crypto companies, not just the Bitcoin ETFs, but they're also looking to invest in startups in the cryptocurrency industry, as well as investing in spot and future-based ETFs. So State Street will provide the administrative and accounting services for this new fund. So it's just going to show once again that we see that Wall Street is very interested in the digital asset space. Many people believe over time it will show to be an inflation hedge. It hasn't quite shown itself as that just yet, but we're seeing that no matter what, people are buying Bitcoin ETFs and are holding, and more traffic is coming into these ETFs. More funds, more banks are investing, more pension funds are investing in these Bitcoin ETFs, and we will see that more states are going to become more interested, more pension funds are going to be more interested in investing into Bitcoin. As you can see here, hedge funds as well as banks with more than 100 million in assets have to file that 13F as we mentioned earlier. So you can see Goldman Sachs went big, Morgan Stanley trimmed a little bit of their crypto holdings, and a lot of that really went from them selling their Grayscale holdings, because Grayscale has the highest fees out of all of the Bitcoin ETFs. So they trimmed those holdings. JP Morgan also has bought a portion, just a small bit, into the Bitcoin ETFs, especially given that their CEO said that horrible things about Bitcoin in terms of his thoughts of it. But at the end of the day, they still have invested some into the ETFs. So we're seeing that some of the larger banks as well as the investment firms are looking to get into Bitcoin. As we mentioned, Morgan Stanley, they did give the green light to its financial advisors to pitch to their higher net worth clientele. So these 13F filings are just a fact sheet basically to show you how much interest there is in Bitcoin. As we can see here, another major news story that has come out is that Apple, which of course is the manufacturer of the really well-known and well-used iPhone, they are now going to be opening up their iPhone wallet for third-party developers to be able to open up payments for USDC as well as USDT, which are stable coins on the blockchain. So developers will be able to access the blockchain, and people can now will be able to pay for various services and goods using their iPhone through the NFC, which is the near field communications chip. And as you can see here, Apple has said it will begin letting third-party developers use the iPhone's near-field communication payment chip to handle transactions following a multi-year pressure campaign. This is coming from the regulators in Europe to open up their platform. Apple has notoriously been known for having a closed ecosystem with their Apple Store, and now they're looking to open up. It looks for other third-party payment apps to be available on their system. So this will now enable some of these blockchain payment applications to allow for users to pay with their stablecoin, and at the point of sale, that can be exchanged for fiat currency for the vendor, so they don't have to necessarily accept and hold that stablecoin. They can have that transferred directly into fiat currency, or they can have a portion of it saved in that stablecoin if they want to hold on to these cryptocurrency assets. One last story we'll just go over really quickly is that Dubai, the court recognized crypto as a valid salary payment. As you can see here, the UAE said that the ruling shows the growing acceptance of crypto in employment contracts, recognizing the evolving nature of Web3 financial transactions. They recently made a decision when an employee who filed a lawsuit claiming that the employer had not paid their wages according to the employment contract. It stipulated that the salary was going to be paid in fiat, and then a portion also was going to be paid in cryptocurrencies. And so this decision now reflects a broader acceptance of cryptocurrency employment contracts, and highlights the court's recognition of the evolving nature of financial transactions within the Web3 economy. So this ruling, as you can see here, affirms that if an employment contract includes such terms, both the company and the employee must honor them. It is reassuring to see that the court recognizes the wages, whether paid in fiat or cryptocurrency, are the rightful entitlement of the employee for their agreed upon work. So we could see over time that more employment contracts will involve being paid in crypto and digital assets, not just necessarily fiat terms. And if it is supposed to be paid in cryptocurrency, then those contracts can be enforced. And it's showing here with this particular ruling that the court will enforce, at least in Dubai. We shall see where it's going to be, what it's going to be like in other jurisdictions around the world. But Dubai has been in the forefront in terms of embracing digital assets as well as cryptocurrency companies that are headquartered in the UAE. So we can see that crypto continues to be worldwide. It continues to evolve and develop over time, and we will continue to keep you posted not only on YouTube here every week, but as well as on X and IG. We thank you so much for watching. We look forward to linking up with you on the network chain. In the meantime, you take care. Bye-bye.